All right, let's talk some shop. Why not? Uh Unfortunately, the excitement, this is what we've been talking about, guys, that we got to try to refrain from the big up days, the big down days, especially with noise behind them, because it can get tricky, can get tricky. And what I mean by that is you get, days like today or the complete opposite day of today where everybody's talking Goldilocks, soft landing, the whole 9 yards. And in reality, we got to just keep our blinkers on. Here's the thing, right? It's going to take, in my opinion, something different. Okay. Something you and I aren't talking about on a day-to-day basis, something that the market hasn't factored in, digested, and priced in already. It's going to take something, and it's usually that exogenous event that really gets things going at this point. Okay, the majority of what we've been seeing, and I guess that's a good place to start. Okay, and you can see a lot of the casual player out there starting to talk about this stuff as well, and it's already run its course. I really don't see this playing a factor at all, and that's positioning, right? We've been talking about the last few weeks how if we're not at the end, we're closer to the end of the extreme of that positioning being unwound, right? And here you can see it great on all these charts today. That's why I made sure I attached them. So this is the NASDAQ, right? And again, if you told me into the October lows that they were going to get to the point where CTAs get net long the NASDAQ futures, I wouldn't have believed it. I wouldn't have believed it. Okay, the S&P 500, fine. I could definitely see that in the bear market rally. But with rates and the Fed and just the regime change and everything on the macro side playing a huge part in weighing on the NASDAQ all year, I didn't think there'd be enough ammo for CTAs. I mean, look at this, okay? You're talking about from the start of the year, right? A year, let's call it a year, right? That they've been net short, right? Here's the last time they were long. They flipped long, okay, into that bear market rally early in the year in 2022, okay? And look, that's where we are now. I didn't, honestly, I thought what I'm referring to is I figured they would get squeezed, right? So they'd be less short, okay? But I didn't think they'd get them to flip long, and they did. CTAs are trend following systematic funds, basically. Okay, so at extremes, it's not that they don't know what they're doing or they're dumb or you know what I mean. At extremes, they're usually late because they follow trends. You understand? So when they get to an extreme long position or an extreme short position, they're closer to the end of that trend than obviously the beginning. Okay, and when you get into these illiquid bear market environments, okay, where a lot of players are on the sidelines, especially when you get institutions on the sidelines, the unwind of their positioning, you can't miss it in the price action. In my opinion, moves markets. Okay, in this type of environment, in a bull market, when liquidity's high, different story. But in thin liquidity bear market environments, you can't miss their footprints in the price action. A lot of the bear market squeezes, if you look, primarily them who really got those things started, right? I mean, that's what's involved. So, and if you look here, right, the NASDAQ was the last, this whole crowd, it wasn't just CTAs, into the October lows, okay? And that's what made that October low a pretty significant low, even if it wasn't, we talked about this earlier today, right? And we'll touch on that again today just to go over it. But even if the October bottom, the recent October low, wasn't the bottom, meaning the start of a new bull market bottom, okay, it had enough to be a legitimate intermediate bottom, meaning that the low should hold for a good amount of time. Right? And that's the most important thing. It's not even how, how high can the rally go off those lows. I think that's the main takeaway when you see that type of extreme on the positioning side go into a low like that. It really tells us that the low should hold because of how much bearishness on the positioning angle of things got behind it. Okay, and we'll look at some of that stuff so you can see what I'm talking about. All right, so you had CTAs and hedge funds, the whole professional side, they were at an extreme short position going into the October lows, and we've just been seeing that whole thing being unwound. Okay, it hasn't resulted in straight up in these markets. Okay, and speaking of these markets, have you guys looked at Europe? I posted a couple of charts today. Do you see what's going on in these European markets? Okay, like we are obviously focused on the U.S. markets. Okay, for obvious reasons. Okay, but the European markets saw a notable material thing that we were lacking into the October lows. One of the main things why I don't believe that this rally we've been in is the start of a new bull market. Okay, Europe had that missing ingredient, and that's that capitulation. Okay, into those October lows, and probably the main catalyst for even driving our markets higher. They capitulated out of those Europe markets, right? Rewind, think about the mentality going back into those October lows, right? You were getting into the heart of winter, the cold. There was footage of German people stacking up wood because they wouldn't have heat for the winter. Remember? You had the mental picture, right? You envisioned the Great Depression out of Europe at that time in October. And lo and behold, how it always plays out like this, I have no idea, guys. Okay, that's why maybe I have a tinfoil hat on from time to time. But the winter was mild, right? Everything that people were concerned about, the complete opposite happened. The complete opposite. They actually seen improvement economically. Okay, and you had everybody capitulate into those October lows, and you look across the board, right? Like I look at the DAX because to me, like, I don't know, that's the most popular of the European markets to look at. I don't know if it's the most active or biggest, but most people look at it. Oh, but look at this, okay? Every time I look on Twitter, I see videos of out in France of people rioting in the street and cars on fire. And you guys see that on Twitter? I don't even know how it comes on this feed, on my feed. I get all these videos. I don't even know. It's nobody I follow. It just Musk puts them there. But the last thing you would think, right, would be that, oh yeah, French markets, the CAC, or stuff like that, should be in good shape. And you look, can you believe this? New highs. Okay, and like the UK, who had nothing but headaches, right? Remember the whole gilt situation, the bond situation out in the UK? You remember that, right? One of the reasons what scared the Fed, in a lot of people's opinion. Okay, what had the Fed take the foot off the brake and behind the scenes have some liquidity being pumped back into the system, right? You guys remember that whole UK gilt situation, right, with the pensions and everything else. Okay, the FTSE, the names of these markets kill me too. Where's the FTSE here? Is this the FTSE? No. Maybe if I just hit FTSE, it'll come up. Here it is. Okay, this is UK. Right? Without following this, like if we don't talk about it, would you expect this? Right? Look at this. Okay, with the Russia-Ukraine war, they're still at war. Nothing, right? Nothing, no reason to think this was capable of happening. So this is where the bull market has been. Okay, this is where the heart of the bull market has been here. Okay, me personally, I really still don't think, even with this going on, that we are in the start of a new bull market. But what's strange, okay, and what's different this go around is you usually don't see this type of outperformance on their end, right? It's usually us leading everybody higher. Okay, and the question becomes, globally, is that enough? Right? Like, what kind of effect do they have on us now? Is basically the question that's got, in my opinion. I really don't know. Right? It's usually, if we get a cold, they end up sick. Right? That, as the saying goes. Now, this is vice versa. So what I think is going to happen, I think we're lagging significantly. And I think when these markets, when they get hit, and there's going to be a normal correction here, okay? Even if this is the start of a whole ripping bull market in Europe, okay? There's going to be just a normal correction in this uptrend. And that's likely when we're going to see selling on our part. Think of this, okay? Almost similar to when we were in a bull market and China was, in their own world, actually in a bear market, okay? When we were ripping the new highs, the China markets were kind of range bound with a bullish bias. But then when we had a little, round of profit taking or correction or sell off, their markets went and tested new lows and then broke new lows, in a sense. So that's, again, no exacts, but that's kind of the backdrop right now. It's the complete opposite of what any of us have seen in a long, long time, right? We spoke about that. So listen, that being said, I think the October lows, there was enough in the global markets to create at least an intermediate low here where it can sustain that level for a legitimate amount of time, right? So let me go back to here with it. Okay, this has been the unwind of all that. So now the question becomes here, okay, and I think this is where a lot of people jump the gun, okay? You see CTAs now have flipped from short to long, okay? Hedge funds, you guys know we follow them closely, right? As a whole in what they're doing, okay? Here's what they look like. All right, same thing we've been looking at here. The shortest they've been, October lows. And now, right, here's the zero line. Here's where they are on the long side. Okay. And what's been really interesting in the hedge fund world is where they are long and short, because that's where the opportunity and the sizzle of that story has been. Okay. This, there's nothing sexy out of that. It really doesn't tell the story of what's been going on underneath the hood. And that's kind of like what we're seeing in NASDAQ now, right? So this is what we've been seeing in NASDAQ, and this is what you're seeing play out in the price action of some of the worst names out there, okay? The most shorted names out there for good reason. They were overvalued, okay? The liquidity, influx of liquidity, now the Fed is draining liquidity. These things should get hammered. They did, but, shorts got too fat, right? It was an easy short, as we spoke about. And now what you're seeing the shorts actually have to feel a little pain, right? Have to do something, have to manage a position, which they haven't really had to do. And what this is showing us here from Goldman, that's from their prime book, the tech positioning, the most aggressive short covering since this. Okay, let's see what does it exactly say here. They've been net. Okay, so tech stocks have been net bought for 12 straight sessions from the Goldman Prime book. So you had 12 straight days of net buying in tech. All right, mainly driven by short covers to a lesser extent, long buys. Okay, 80% of that buying, that aggressive buying for 12 straight days, short covering. Okay, and think about all those stocks, right? The Rokus of the world, the Twilios of the world, right? You remember us talking, I couldn't believe these things went down so much in basically a straight line without seeing rallies like this. Okay, that's, I think, more unusual than what we were seeing recently. So now we're seeing one of these bear market rallies where it gets shorts to cover because they feel a little pain, and that's exactly what we're seeing here. So the point I'm getting at now is we're at a place where, now what? Okay, now the whole bearish side of that big trade off the October lows has been unwound. Okay, does that necessarily mean, automatically that we should see aggressive selling and shorts get aggressive and start putting that exposure right back on immediately? No, but again, most traders, they think in extremes, right? It's got to be one or the other. If they're not covering shorts anymore, that means they must be getting aggressive, slapping on new shorts. But the market doesn't always work that way. There's a lot of in between, right? And that goes to the old saying, timing is everything. That's what makes, these things so difficult to time when you're not at extremes. The beauty is when you have this set up at extremes, okay, it really narrows down the timing aspect. That's what makes that signal so potent. You could still be early, okay, but even if you're a little bit on the early side, if you do catch that turn, you're going to be significantly rewarded, So that's the beauty of watching, looking for extremes on the positioning side. Right now, we're not, in my opinion anyhow, we're not at any significant extreme where things have to turn. If anything, you can make the argument that the buying may more than likely won't be as aggressive. I think that's the takeaway. Okay, the buying we've been seeing won't be as aggressive. All right. So what's that mean? And this is nothing new. If you've been coming to, obviously most of you are members, so but if you've been coming on this webinar for the past couple of weeks, as far as the indexes are concerned, okay, I think they're tricky. I really don't know. We were talking about this, right? You're going to be Houdini to think you're going to try to trade in this here. Look at this, right? You really, really have to have a lot of faith in your trading ability if this is where you want to try to find a place to eat. Yeah, tough. Because again, all right, yeah, you got a range here, right? And you know what everybody's looking for. They're not even looking to play the range. What they're looking for the break of the range. And exactly, that's where you get chopped up. Exactly, you get frustrated and chopped up. And McBob, I give you credit. You hit the nail on the head. You said that we probably see more of these tighter ranges from time to time, right? I remember you saying that a few weeks back, just to frustrate people even more. So that's I think the difficult part of where we are now, because you have a situation where there's no edge, there's no significant edge, okay, that can help on the aspect of timing right now, okay? And yeah, you have a range here, and you could say, oh, I'm just going to trade the range, but what's to say that the range can't break and we do get a little bit of weakness? You understand? That's not a foregone conclusion. You understand? That certainly can happen. For me, I told you what I would like to see, what I think would be perfect here. If you're a bull, if you want this bullish phase to last, I think you want to see this. Again, not to get technical, but just because you see it from time to time when you get into these things. Something like that. Yeah. however it gets there, something like that. And if you have the right noise behind it, you're going to have a lot of people bared up, calling for new lows. And you know what? If nothing's changed as far as the background is concerned, right? You're probably, that's an entry you want to look at. And the other thing too is, okay, and this is where I think it's important for us to keep reminding ourselves to focus on. Like, if you want to play the indexes, I think that's what you're looking for on the long side, okay, at the least. I think that's what you're looking for. Okay, that's what you want to see on the long side. And hopefully you get some legitimate edge there out of positioning and sentiment as well. Okay, if that comes to fruition. But in the meantime, I think we got to continue just to look towards names for opportunities. Okay. The problem is you have to be patient there as well too, because a lot of names have performed well. You know what I mean? So you can't, especially like look at the NASDAQ squeeze names. Just because they're in a bullish phase and shorts and hedge funds are getting squeezed, that doesn't mean these things just go straight up, for as long as the bullish phase is going to last. Like, you may see, right? This is something we talked about yesterday. Like, let's say SHOP, which is actually did come down. Okay, you may see some shit like this. Okay, SHOP comes down, then bottoms out, then goes back higher, right? Down. It doesn't have to be this or this. This can be in this hockey stick type formation, this thing, okay? And just be in an upward bias. You know what I mean? In an upward bias here for as long as this bullish phase lasts. Yeah, NVIDIA is another perfect example, right? That's probably even a better example. Like, look, okay? We could still be in this, if you want, bullish phase, okay? But what? You can't have this thing pull back and digest. Look, like this, right? Just like that. Okay. And what I'm telling you is, even though I'm referring to this as bullish, that's the last thing I'm saying is that NVIDIA rallies to new highs, a whole new bull trend. I'm talking about, even with this, I'm talking about a bear market rally, in a bull phase inside a bear market. That's basically what it is. Right? So, and here's, I think, a perfect segue for that, right? And then we could look at random things we like to look at. But because Hartnett, because he doesn't, if he needs to change his tune, he changes his tune, Hartnett. You know what I mean? We spoke about that. Watch. So, and he's been pretty bearish. What am I doing here? Oh, let me go to Hartnett. Okay, this is a big portion of his handicapping. Okay, he likes to see how investors and fund managers position. That goes into a lot of his contrarian work. Okay, and he's been bearish. Okay, this was Tuesday, McBob. It comes out every month, the Global Fund Manager Survey from BOBA. Right? So you guys know, right? Hartnett's being all out bear. He's not, you know what I mean? And he just thinks because we are in this bear market rally, it still has more work to do in certain things before we see what he thinks is still to come, the next phase of this bear market. Oh, Flow Show. Yeah. That's every Thursday night. That comes out tonight, Nick Bob. Oh, that's what you were thinking. I got you. Yeah, that comes out tonight. This is the Fund Manager Survey, comes out every month. All right, so it gives you an update of, on how fund managers are positioned and what they're thinking and stuff like that. So obviously this is a fascinating read in the bear market, right? Because it tells you a lot of the story. And if you remember, like towards the end of the summer, leading into October, they got really bared up, right? Again, the title, if I remember correctly, was "So Bearish It's Bullish" was the title of one of the main notable write-ups during that time. And it was because everything, cash was extremely elevated to levels we haven't seen in a long time. Just everything you can think of that you would want to see as far as positioning is concerned at an extreme was all there, in his opinion. Okay. And again, that needs the bear market rally. That's its job, right? Right. Just like I thought CTAs, I never thought NASDAQ CTAs would ever get to positive. Somehow, some way, they get them there, right? That's what happens in these bear market rallies. So in his opinion, he still thinks there's work to do here to get people to that, at least to that neutral point where you can start to unload that bearish price action again. So look, the contrarian trades out of this: long equities, US and tech, right? All the things that you want to be bearish on big picture, right? Short cash, here's the short side: short cash, China, and banks. What's really fascinating is China, and it probably still has room to the upside, but here's China. We've been talking about China often. That's why I bring this up. That's not it. Where is it? Here it is. The most crowded trade, okay? Long China equities. You remember what it was prior to that? The US dollar, okay? You see how Hartnett's the main guy at Abova, analyst, whatever you want to call him, handicapper, okay? So look, prior to China overtaking the dollar, prior to that, it was oil, okay? Once you start seeing these things up on this list, okay, you don't want to get long into it. Okay, there could still be upside. If I remember correctly, I think the dollar still had another month of upside, and then you know what happened to the dollar. The only thing I've seen last on this list for more than it usually does was tech, with tech stocks in the bull market. Otherwise, you know, I remember commodities was on here, and then commodities the next month shit the bed. Excuse my French. I think it was over here. There, long commodities. So now the most crowded trade is, Bitcoin, good call. The most crowded trade is China, but you could see here, it could get more crowded, you know? It could get more crowded. But I found that interesting that it already was on that list. So, you know, that's what makes that China trade here. I know, again, a lot of us like the China trade, right? Especially if we're going to get outperformance in other markets, it makes sense to like China, you know, on a longer term time horizon. But, right, if it's crowded, there may be more digestion needed here before you want to start dipping your beak. Yeah. So regardless, the point I was getting at here, okay, is we more than likely, the probability is we probably still have more of this to take care of. Okay. I think that what knocks this out of the equation is if we get some news, and that's what we've been talking about the past couple of days. And I know I'm the start of it, you know, me and my conspiracy theories, but if there is some sort of exogenous event, again, just something out of left field that comes, and you guys are probably saying, well, I mean, listen, that can always happen. Here's the difference, okay? Here's the difference. When you're in a bear market environment, it happens more often. I don't know why, okay? Maybe the whole world is rigged, okay? It wouldn't take much for you to get me to believe that, all right? I don't know why, but in bear market environments, it happens more than usual, okay? And because of the instability, again, of just the economic system at that time, it can have a larger effect on things, right? I mean, just common sense. If you have some sort of 9/11 that happens now into, the most aggressive hiking cycle from global central banks, it's a problem. It's going to be, things are going to freeze up a lot quicker than they normally would, So, yeah, there's, again, I kept referring, I told you it has just been very reminiscent of the post-2000 bear market. A lot of similarities and a lot of things that are different, but it feels like a time, it was 2001. A lot of bad things have happened already. Enron, WorldCom out of business, just a lot of things the market digested already. And the market was starting to show some resilience. Okay, it wasn't ripping to higher or anything like that. Just it started to show some stability, kind of like we're seeing now, where you're getting all this negative news and the market brushes it off. And then all of a sudden, boop, 9/11 happened and case closed. That took care of that, And nobody was factoring something like that. Nobody was thinking about that. Everybody was paying attention to what tech company is going to go under. What's this? What are we? The same talk. Are we in a recession? I don't know. Do you guys remember, some of you who were around back then? To this day, they don't even know if we were in a recession. Okay, the post-2000 bubble, same exact talk. Same exact talk. It wasn't a deep recession. Okay, same exact talk. Soft landing, the Fed, same exact stuff. What threw a monkey wrench into the whole situation was 9/11. But what it also did too was fast forward the process of capitulation. Yeah, you're right. So how do you prepare for that? It's hard. It's difficult. You can't. I mean, the only thing I can recommend from my experience, okay, is when you're in this type of environment, okay, the name of the game, you don't want to get caught with a bag, okay, because that's going to bury you. You can have losers. You can lose money. Don't let it bother you. Don't lose sleep over losing some money, okay? You can lose money in a bull market. The only thing you want to avoid is get caught naked holding a bag. What do I mean by naked? If you have multiple positions on and you're oversized, make sure you have on some sort of protection to soften the blow. It's not going to wipe out all your losses. That's not the purpose of it. It's to soften the blow, okay? Because if it's just losing some money, right, a losing trade, that's totally fine. That's totally fine. Okay, so that's, I think, the most important takeaway is exactly that. Okay, and there's a big difference there, right? Because if you're a believer, we're in the start of a new bull market, you want to get more aggressive. At least that's me. You understand? If I believed we were in the start of a new bull market here, right, and I had the things confirming that we were in a new bull market that I usually look for confirmation from, I would be a lot more aggressive and be willing to take that hit. You understand? But we don't have those things. And that's why, again, my recommendation would be, if you are getting a little more aggressive, make sure you have some sort of protection on to soften the blow so you can survive and be around to take advantage of, again, the positive stuff that may exist in the future, whenever that may be. Yeah, and I was talking to Ranchero about that yesterday. Like, he likes names out there, right? And he's interested in buying some stuff with time. But that's what we mentioned. You have to manage those positions. You got to make sure you're managing those positions if you're looking to go that route. Because there's a lot more danger than there usually is if you're in a different environment. And for me, what do I mean different environment? If you had a lot less potential supply to hit the market, I think that's what the main reason for me why we're likely not in the start of a new bull market is that you haven't had that throw in the towel moment or moments. Okay. You have passive money, investor money that is still in. Okay. You had a lot of capitulation in other areas. I think you had hedge fund capitulation. You had even on the institutional side, you had capitulation. You had retail trader capitulation. You just that passive money that thinks all you got to do is wait it out and you're a lock to make money in the market. That crowd needs to spit up. That's the last chapter of every bear market. It's been since I've been following the game. Just like we talked about, just like they're the last to come in at the end of a bull market, they're the last to spit up. And they just haven't yet. Okay. I'm talking about that fund flow capitulation, the passive crowd, that big chart we look at that came in towards the end of 2021. You will look at it again. I got it here. They're still in, they haven't spit up. And the mentality from that crowd is simply this. If you can wait it out, if you can sit through a bear market, if you can sit through the storm, you will make money. Okay. That's their mantra. They've been fed that from CNBC and everybody else over the last 2 years. Okay. As long as you don't sell, you don't lose. Huddle. Okay. They have to get punched in the jaw and spit up. They have to. Okay. They always do. Always. You can't have that mentality. Nothing's a lock. Nothing's a guarantee in life, let alone passive flows into equities. You understand? If it was that easy, everyone would be billionaires. What happens is when you get into bear markets, people hoop their bloomers so hard that they can't help themselves. They have to sell. Right? They believe there's no light at the end of the tunnel. Always. Yeah, exactly. And I don't listen, as much I know a lot of you, it's kind of you're kind of surprised by it. I'm not surprised by it only because similar to 99 2000, okay, the market and the noise in the market fools you to believe that if you take a loss and you're a long-term investor, you're a sucker, you're an idiot. Just hold time. As long as you have time on your side, you'll be okay. And at the end of bear markets, usually what everybody's feeling is, this is never getting better. Basically, this is what's going to happen. Okay. If it's not Armageddon, right? If it's not Armageddon at the end of this bear market, what's likely to happen is everyone believes what Druckenmiller believes. That the next 10 years, the market does Gotts on Gould nothing. And it's not worth sitting in it. Right? And I'm an idiot. Why am I sitting in the equity market taking all this risk when I could just be in a money market and making 4 times the amount that I'm making right now? That's what that's what everyone is going to believe when the bear market's over. Okay, that's what whether it's Armageddon around us or they believe what the Druckenmiller playbook. For as long as it takes, that's usually how it goes. Okay, that's usually how it goes. And you guys remember we were talking about Europe. You think it's a coincidence that those markets look so much different than ours? Isn't it crazy? Yeah, that doesn't bug you guys out? Like these markets, they were in the eye of the storm. No, they were in the eye of the storm. These markets, and I told you, even myself, right? Yeah, I quote myself. Okay, I remember on this webinar back then, we were talking about it. And this was my exact quote. I can't buy these lows over there, but there's capitulation. And I remember we talking about that's real capitulation, where you see capitulation in front of you and you still can't buy it. Right? That's real capitulation. You don't want to believe it because it's too scary. Who the hell wanted to get long Europe back there? You know? That's the feeling. That's the feeling. So again, so you know where my head is, okay? If I'm not seeing signs, and here's another thing too, which I think is important, I wanted to touch on today. I don't see signs of a new bull market. I don't, okay? We're not, at the start of a new bull market, we're not gonna see weekly spec activity dominating the whole day and no real buying. You know, we're not going to see it. We're not going to see Tesla trading 100,000 contracts on 5 different lines within the first 5 minutes of trading every day. No, yeah, right? That doesn't make sense. You know, you're in a new bull market, you climb the wall of worry, right? The retail never wants to get back in because they don't believe it. Yeah, it's in this, there's not a doubt in my mind, okay? And we have the facts to back it up. This has been a short covering rally, right? Predominantly, that's it, okay? Especially in tech, mostly in tech. You saw the numbers, 80% of the action has been short covering, not new buying. Doesn't mean the rally can't be strong. Doesn't mean the rally can't last longer than people think. It has nothing to do with that. But what it tells us is more than likely, right? The probability is not a new bull market. Okay. The new bull market, there are bull markets, pockets of bull markets in certain areas and things under the hood, not in the overall market. Okay. There are new bull markets and other things. Like I give you an example. There may be a new bull market in this thing. Okay. Which, by the way, the buying recently has been awful. Okay. Active. We see call activity. Not like there's no call activity, but you know, it's the same squeeze names, short dated, right? Same squeeze flow. They're not finding new names to take positions in. They're riding the momentum, playing musical chairs in these squeeze names. That's what they're doing. Tesla, all that call activity, I think it was yesterday. You look at open interest the next morning, there was nothing there. In other words, they didn't hold any of that action. They got out of everything that day. Insane. Insane, right? So, but where are we seeing any new buying? That, right, is not much of it, but where it, names like this, okay? Names like this. This is where there's been pockets of new bull markets. Oh, CDNS, by the way, T, I tagged you on a couple things. Did you see it? A chart and the flow and all that, because I know you like the name. On this thing. Yeah, no, I just know you like the name, so I wanted you. Did you see the Bova chart too? Bova had a pretty constructive chart on it. Yeah. I know you liked it cheaper. That was a good call. Yeah, there's a good name. This is a great name. But you know, as wholes, like in sectors, right? There again, there are pockets underneath the hood. Like T saying, there could be a name, right, that's bucking the trend, but it doesn't mean the sector is in a new bull market, right? This T may end up being a new leader in a new bull market whenever we get there. You know what I mean? Very easily. I kid you not. I'm not trying to gas you up on it. This could very well be the next NVIDIA whenever that new bull market starts. So what we're seeing now is we're just seeing, we've seen sectors outperform. And first it started with like the more defensive sectors, energy, commodities. We're seeing certain pockets. It goes from kind of like rotation in a sense. Okay. When something gets to an extreme, you see it unwound, right? You guys have been seeing, I've been utilizing those ratio charts lately, right? Because like this one, for example, okay, you had in mid-January, let's say, or maybe a little bit before it, you had extreme short positioning in NASDAQ, right? And you had extreme long positioning in China. Okay, this was that as the trade was being put on. That's the crowding. Okay, the unwind hasn't been as significant, but this is the unwind. You know what I mean? This is because this got to an extreme. This is being unwound, and that's what we're seeing. ADI, ADI had a good quarter. So T, you exactly what you're doing is what we're supposed to be doing. It's a stock by stock basis. That's simple. Okay. And if the name, if you're really familiar with the name, meaning it was popular in the old bull market, it's going to be a tougher trip. No matter how good it looks, it's going to be a bumpier ride. It's going to be a bumpier ride. We generally want to look for the least crowded areas. That's where the smoothest trips are. That's where, like, again, just because the name, who the hell would buy it? Like, Lowe's conglomerate. You know what I mean? It's just the selling is not as aggressive because nobody's in these things. Nobody's in them. The only time these things, like for example, these things, they got hot, they could see some selling, right? They look at this thing. This thing still hasn't sold off. I mean, look at this. Look at these things. This thing didn't sell. None of them. This thing is a little sideways. But that's where the new bull markets have been. You know what I mean? Pockets like that. So it's a stock by stock basis. All right. Does it make sense? You guys we've been talking about this for a while now. The indices, you have to, what we got to try to avoid is relying on the indices to try to make any money. That's generally what we got to do. Yeah, that's what it is. They just got too hot. A lot of them, T, a lot of them got too hot. And you know what we need, T? This is what we need. Okay. We need this and everything, including those names you mentioned, to get hit with it. You understand? We need a round of selling where there's high correlation and everything comes down together. And then when that selling finds buyers, that's where you're going to see the names like you're mentioning, T, that you have your eyes on. That's the entry. And that's where you can give them a little bit of a leash. Yeah. Yeah, McBob, there's just too many, and all the signs are there. Whether we sell off hard or not, to me, is irrelevant. It just meant the upside becomes a lot more difficult. Okay, we talked about this a couple of weeks ago. These upside niners, right? All this tells us is that be aware, because this is a spot where buyers have a tendency to show exhaustion, right? This trend could have exhausted itself, could be exhausted at this point. Okay. Does that mean this? No. It just means that in all likelihood, it needs to digest. Right? If it doesn't digest for long, what it tells you is that this trend is a lot stronger than you think. Right? That's the takeaway from it. But in normal markets, right? This is bringing to our attention. And look, we're getting digestion here. We're getting some digestion. So as this happens, though, right, we want to pay attention to names. And listen, I'm biased, but without the flow, I'd be lost in space. Unlike you guys, without the flow, I'm lost. Because like I'll give you an example. The last couple of days, there hasn't been much buying in anything. There hasn't been any new names being bought. So that simply, to me, is telling me there's nothing to get excited about, right? If they're just playing weeklies, that's telling me just day trade. Take out your knife and try to get in the middle of things. Don't get greedy and just scalp. That's what it tells me, right? Now, if we start seeing them come in and start building position in names, right? Even if the market is not looking any different, what it's telling me is there's a risk appetite out there. People are looking to put some, institutional money to work, right? That's ideal. That's what we want to see. So, I don't have anything else to interpret like that. There's nothing else to interpret. Like yesterday, yesterday I had a decent day because I had one really nice trade. Before that, useless. The day before that, I didn't play anything. The day before that, I played two names. Honestly, I should have never played them. And as soon as I bought them, they hit a brick wall. They didn't tick higher. As soon as I hit the buy button, it was the high of the day. Stopped like a clock. No, I honestly, I even look at it afterwards because I was looking at it and I didn't want to buy it because it was up already, But this was a name that caught some action cheaper. Look, right? Good looking move. Look at this move here. Jesus Christ. My best trade this week, T, you're going to laugh, is this. This MPW. That's my best play. Yeah, this was, and the reason why, again, it was a day trade. The action came in here. Okay, so decent spot, right? And yeah, yesterday. And not only was it a good spot, the flow forced me into buying it. It didn't catch just one call sweep. I wouldn't have played it. Even though it was at a decent spot, I probably wouldn't have played it. But this is a name that's been lit up as far as bearishness is concerned. Put sweepers galore the whole way down, every day. You guys remember we talked about the put action quite a few times in this name. You had the bear cave and like muddy waters shit all over the name, right? Talking about how they're going out of business. Okay. And then lo and behold, yesterday morning, some coal bond comes in. I'm like, oh shit. I don't know if you saw the post. I wrote a post like, listen, there's been nothing but bearish activity in this thing for 2 years straight. And there's some bull flow here, some sweeper activity. And then, boom, put sellers. Okay. So once I saw the put selling activity come in with the call buying, I said to myself, at this spot here, day trade, that's ideal, right? The put sellers probably put in a little floor for the short term. And, if I get lucky and the call sweepers keep coming, maybe they push it higher. If not, right, I get out scratched. Has I covered this? Bullish or bearish recently? Al? There was a lot of bears. They hated this thing. And honestly, they've been right. This thing has been money for bears. There's been put sweeper activity, I swear to God, every day on the way down. Every day. Every little rally, boom, put sweepers. So just here, for whatever reason, maybe it's earnings, maybe it's shorts, hedging, but once I saw put sellers come in, it was worth a day trade. Here, this is yesterday. And by the way, you look at this, right? That's not where the action, here's where the action came in. It didn't move, but then once the put sellers came in, then it started to move. Bears MPW, more of a July, September story on the bear. Yeah, I don't know the story behind it. I know quite a few shorts were all over this thing and they've been right. And I'm not swinging it. I just thought because of all the bears, maybe they get squeezed a little. And I mean, over a buck on a $12 number, there's nothing wrong with that intraday. But the point I'm making is not bragging about this trade. The point I'm making is there hasn't been a lot of action out there that's been too interesting, especially in new names. There have been scalping opportunities. That's it. So when you see that, for me, it's chill out and let things set up. Let them start buying things. There were a couple names here today. We actually came out of this with a top bet list. There's an energy name that looks a little bit interesting for those of you who like to play underbelly energy. Hold on. LBRT. Anybody know that name? So decent spot wise, right? You're not chasing a parabolic move like a lot of the things out there. Right? It's been really choppy. And today they came in and swept some calls, decent size for this name. Doesn't catch any action. Is this a driller? Anybody know? Do they drill? That would be a plus, I guess, right? If they drill. I never heard of this name. But there you have it, So this is kind of, again, this is what we want to see on a bigger scale. We want to see it in more names, even more liquid names. It's just right now there's a new name buying ground out there. The other name today was this. Mark. It looks okay, Mark. Honestly, the spot's not bad, so you could do a lot worse. Yeah, it looks interesting. MUFG. Now, this is a whole different spot here. This is the problem, right? What do you guys think? How do you buy this thing? You wait for this, or I think, put it this way, if we see more action like today come in, I think you just got to buy it if you like it. You just have to buy it if you see another round of action come in. But if you're not crazy about the spot, and I totally get that, you might, let it trade a little bit. Maybe you get a little pull. I don't know. This is what I hate about these things. I don't know. Yeah. I don't know how to treat this, hydraulic fracturing services. What do you understand that, William? You know what that is? That drilling? That's drilling, right? Yeah. So interesting. So listen, there are a couple names we can keep our eye on. Honestly, I thought we were coming at it today with nothing. We had nothing yesterday, right? They help support drillers. Interesting. Okay. I like that. Yeah, that's what worries me, Mark. Good call. You're talking about Hartnett. He's talking about the crowded trades, the overseas banks. That's what he means by that. Mark, and I know what he means by crowded trades, the overseas banks, but he even spooked me out of the US banks, which I was bullish on coming into the week because of this. I like this, what's gone on with the banks. Okay, so again, this is positioning we're looking at. This is China. Okay, so look at this. Boop. You see where that lined up? Okay. These are ADRs these are the names we look at here. Okay. Down here are the financials. So this is what caught my eye this weekend. You have the financials that are holding up well. Okay, they actually been bullish more than anything else. And look how aggressive the selling has been. So two things. They're getting out of that trade. Okay. Let's go back to Hartnett. Hartnett loves the banks, big picture wise. Okay. He thinks the banks are going to be a new leader. Okay. You have them, if they need to get exposure back on in the banks, and you're in it already, you know how that works. Look at what just happened to tech. Okay. So that's one. Two, they are aggressively selling the banks, and the banks, you look at the price action, unaffected. Like MS, I think, I like MS the best of them all. I think MS, like it's usually JP Morgan, Goldman Sachs, than everybody else. I think Morgan Stanley is going to take that top notch. So look, you got a hedge fund selling, you're telling me, aggressive, and this is what's going on in Morgan Stanley, right? You understand what I'm saying? Like somebody's soaking that up. Yeah. And, I mean, let's look at like the three top ones. Here's Goldman, right? They've had some negative news here. But hedge funds are selling into this, right? Upside niner, sideways. Here is, what the hell did I just do? Here is JP Morgan. Look at that. Looks like anything but selling in these things. I honestly, I don't know if I might like them even better if they were selling, to tell you the truth. But like Mark's pointing out, who's absorbing this selling? And Goldman had that bad. Always do the opposite of the magazines. Which economist? And Goldman had that bad economist cover Goldman Sachs. Oh, I know what you're talking about. I know what. Yeah, the Economist, the magazine. I got you. Yep. Yeah, off the Goldman news. Yep. That's right. And here are some of the others. And they look good. Like Citi's been the worst of them all, right? Citi and Wells Fargo, really. Here's Citi, and like Bank of America too. Here's Bank of America. Constructive, right? You probably want to buy, if you want to buy, you probably want to buy one of the top three, I would think, but I don't know. I was hoping to see maybe some decent flow in them. We saw a little, I think, Bank of America, a little Citigroup, but nothing noteworthy by any stretch. Right. These now you're talking about overseas banks, right? That's where all the money's been made. That's where all the money's been made. This is Argentina, right? Or Brazil. One of the two. Yeah, Argentina. Right. I think even worse than Brazil, Argentina. By the way, we saw another name today. Did you see that name that caught action? FMX, right? No. Oh, wait. I think it's FMX. Yep. Look at that bad boy. Económico Mexicano. You believe this? This is where all the money's been made. So this is what Hartnett's referring to as a crowded trade. I mean, look at the moves. But they've been so, these things, you talk about nobody in these things, who wanted to buy these things you're talking about for over a decade? Look at this, right? Like, think back to 2020 off the COVID lows. Would you ever buy any of these banks? I could guarantee you that they were going to get bought out in a week and you still wouldn't buy it. You'd buy a Kathy name. Is that what's going on, McBob? I don't even know. I don't even know. I just thought they're buying everything overseas. I don't even know this, the falling dollar, right? That played a big part. Reshoring manufacturing out of China. Wow, I didn't even think of that. I just thought the underperformance. And I don't know if you guys were around today when it was dead intraday. I posted a whole thing on Goldman had a note on why Europe is outperforming us. I don't know if you guys saw that, but some interesting stuff on there. How they're just significantly undervalued from being ignored, basically. What's the Argentina ETF? I don't even know it. What is it? Oh, are you kidding me? Are you kidding me? You gotta be kidding me. FXI ARGP. Like that? So this is long FXI, short Argentina. That's what this is. If you do, watch this. Okay, and pull up a weekly here. So this is long SPX, short Argentina. And here's the rollover, the outperformance. And look, you had here 2016, you had a couple years of it. That was the last time we saw anything remotely close to this. So if you saw long dated flow Morgan Stanley, yeah, honestly, it doesn't even have to be long dated T. This could be just a trade. If you like it for a trade, I think more so than even long dated. But either or. But I just personally, I like Morgan Stanley the best of the banks. People who are in it for the long haul haven't puked yet. Yeah, that's my problem with anything long term. You know what I mean? Yeah, I that's what I would look to do. I would look to swing it. I wouldn't look to tuck it away. I don't look to see, but again, that's me. And I wouldn't even say a preference thing, but the logic behind it. I don't want to tuck anything away without the signs of a new bull market. But I'm telling you right now, T, I will miss sweet spot entries on a lot of the names you're talking about because of it. You know what I mean? I promise you, if you take my approach, you're going to miss many sweet spot entries that you're looking at. And I know that's what's frustrating to you right now. I know that's what's frustrating to you. But here's the way you gotta look at it to make yourself feel better. And you weigh both sides. Okay. Yeah, that's the thing. The way you gotta look at it, T, the way I look at it, and it makes me feel better about it. I may miss out on being really early on some winners, but what about if I get caught in capitulation? You understand? What would affect me more? That's the way you got to look at it. Okay. Does the pain hurt you more than the gain? It's honestly, it's that simple. Like for me, I'm willing to punt being early on a handful of names because I know even if I get in later, there's going to be a whole new bull market that I can take advantage of. You understand? Yeah, that's the thing. Like for me, and especially if you're talking about like survival in this game, I've seen too many people get blown up trying to build into a bear market, and they were early. You understand? Like if you're early, it can be painful if you put too much on. Now, again, it doesn't have to be one extreme or the other. You know, if you like a name T, you really like it, you know, you see action in it, you like the entry on it, then take it, you know, start putting away some. That's no problem. But again, going back to where we started the webinar, what you want to avoid is building a basket of names without protection. Because like McBob said, if you have that event, that capitulation event, and you're holding a basket naked with no protection, there's a lot of stress, pain. The stress of it is going to knock you upside the head. You know? What? Don't even say. Hubs? Why? They had earnings? It had to be earnings, right? I think that's why I didn't put it on the top bet list. Get the hell out of here. That had to be earnings. It caught a decent sweep today. Yeah. Oh, it was earnings. Boy, that's why I didn't put it on the top bet list. It was a half decent sweep. That's hysterical. Hubs, this was a great name. Remember? This was a great name. You know, look how much it's up huge, and look where it's at, where the blue line is. Look at it. It's a big mover, this thing. Oh, DraftKings, that's earnings too. Yeah. See, I think it's going to be interesting to see post earnings in this stuff, because what we're seeing now, a lot of the flow we've been seeing, and even the price action, the squeeze, is ahead of numbers. You understand? Like what you have is you have shorts hedging, covering ahead of earnings because they see what's going on. You know, post earnings, let's see if this continues, you know? And that's right, because a lot of these names, they're still set to report, you know, they report later. But you know, again, we'll see, meaning does this last a bit longer, or, you know, do we go back into buying some of the other stuff, the new regime stuff? Here's quickly some of the other stuff quick, and then we'll talk about whatever you want to talk about before we wrap it up. It's going to be interesting to see if they start pricing in additional hikes. That's what's creating some volatility out there right now. Okay, the rate cuts, they're not as big of a deal as people are making them out to be. Okay, because pushing rate cuts out because the economy is stronger than anticipated, you understand, is not the end of the world. If they start pricing in hikes, additional hikes, that might need to be priced into equities. You understand? September 2024, no, 2023, you mean, right? Oh, next year. What they've done, if you remember, we were talking about July. Remember, we were talking about July? The market was pricing in. So the start of some cuts, that's gone. Right. So now now the last I seen, they started pricing in some cuts at the end of the year leading into 2024. Yeah. So you see it on here, down here. Yeah. Yeah, so you know, what I find hilarious in all this is like this all this stuff is great. If there's an event, everything goes out the window. You know what I mean? Like again, going back to 2001, okay, rate cuts. The Fed could have said back then they don't want to cut rates for another 6 years. It didn't matter, right? As soon as planes went into the World Trade Center, all bets are off. And I'm not saying it needs to be planes into the World Trade Center. It could be something breaking in the plumbing of the system, you know? So that's where the rate cuts, I don't think really matter as much. I think it's the Fed, them pricing in more rate hikes, another round of rate hikes, which Hartnett thinks ends up happening. That could be a problem, right? That's where you might see even this stuff that has been tame. Where is it? By the way, Sharpies, they've been nuked. Okay, we don't even know what Sharpies are doing. They're destroying my life. For all we know, Sharpies could be maxed hedged right now. We have no idea. I don't even know what's going on there. The data got hacked. That was 3 weeks ago. I have no idea what's going on. What was I looking at here? Oh, my dog's snoring up a storm already. I know. That's what worries me, Theo. So here's credit default swaps, okay? If the market needs to start pricing in additional hikes, another hiking cycle, you might see this react. Okay? And again, just a reminder, okay, because we haven't needed to pay attention to this. If this does this, even individual names, that playbook goes on hold. You understand? You do not want to get in the middle of that. You know, you wait for it to run its course, and then you'll get better entries anyway. But you do not want to get in the middle of this. That's where the playbook goes out the window, right? That's why we're still looking at this. Otherwise, we wouldn't even pay attention. So we need to eye this here, you know? Yeah, and let's talk about something else, okay? Because I really don't know. Maybe McBob. I know McBob follows it probably more, at least more closely than I do. This whole liquidity thing, okay? Because you know what's going on here, I have no idea. All right, there's different versions of liquidity, certain measures and stuff like that. All I can tell you is a lot of the stuff I follow, call it coincidence or not, liquidity bottomed out into the October lows and has been up ever since. Okay. Just recently, there's been a little pause. Okay. So think of it as a chart. You just posted in the Steamroom. Hold on. Let me switch over there. Hold on. Oh, this looks good. Hold on. Okay. This is a better chart. All right, so McBob just posted a nice chart, it looks like here. Let's see. Okay, here you go. Right? So whatever's going on here, okay, supposedly this is going to continue into March, is what I'm hearing. Jay, question on Steamroom. Yeah, all day I'm on audio. Yeah. No problem. So, McBob, are you hearing something similar to that? That for whatever reason, the TGA side of the Treasury, global central banks, China emerging markets involved, the debt ceiling, I'm hearing as a potential reason why liquidity there should be a positive backdrop to liquidity into March. And then from what I'm hearing, it starts to drain again. Okay. If that's the case, again, I don't think it's a coincidence. I think we continue to see more of the same up until March, you know? And listen, whether it's correlated exactly, I'm not saying that liquidity there's a remote control on speculative assets from liquidity, even though you can argue that by looking at some of these charts, but it's extreme short covering in these things. Could it be the catalyst for extreme short covering? Of course it could. Yellen is messing with TGA, right? So that's the big thing, that the liquidity folks, again, this is not my expertise. I'm clueless. I'm being honest. Okay. But the liquidity people that I follow who bring this to my attention have told me that it's not even the Fed. It's coming out of the Treasury and it's offsetting QT completely. Quantitative tightening. Offsetting it. Right? So that whole Fed rigging system that we were talking about has offsetted that. And I told you, a good follow for this stuff. Again, I don't know, I'm not an expert on it, so I don't know, how accurate or whatever, but it lines up with what I'm being told. Okay, that's all. Here. Okay, so this is kind of the chart my guys have shown me. It looks like this. Okay, and here he's making the point. Look at crypto, right? And look at the overlap on this. Okay, and there are a couple things. You have what McBob's talking about, the Treasury, Yellen doing some funky things, and China and emerging markets who are on a different schedule than we are. You know what I mean? Where's there's a good chart here. Global liquidity, capital outflows. Is this it? I think this is it. So this is emerging markets, right? You got the central banks, the PBOC, and emerging, that's China, and then emerging markets. You had an influx of liquidity there. Now this, from what I'm seeing now, it's sideways. So a little pause there. All right. So again, something to keep an eye on, especially for the more speculative stuff. But if you're interested in this, he's been around. He's got a couple books out. You probably know who this guy is. But this is for the more speculative stuff. Yeah, look at these Bitcoin plays. Honestly, I'm being honest. I didn't even touch any of these things. I wish I did. I wish I did. I wish I did for trades. Some of these stupid stocks too, intraday. Like this thing's up and then it gives it right back every day. But a lot of the squeeze names, this has been the beast. You don't have to go that speculative. This here. Look at this rip. So something to keep an eye on. Another dude who's really good with this stuff is Matt King from Citi. He posts a note that I share with you guys from time to time. Where is he? Here he is. So if you really like this stuff, want to learn about it, he's the bringing the trash back again. He's the one to follow out of the major banks. All right, but again, something else just to keep in the back of our minds. You want to rent these names, okay? We just want to rent them. You do not want to start buying these things, please, please. Okay, please. These things are, 99% of them are my dog's poop. That's the equivalency. And that's why you're probably better off just buying real stuff and playing with that off the liquidity. Skills, has that squeezed? Like, can that even squeeze anymore, or is it done? Look at this. Jesus, what a dog. What a dog. And you know what I would like to see? What I also would like to see, if we remain in this kind of like little sweet spot of a market, I would like to see a lot of the crap die out, like really just drop dead. I'm not talking about growth stuff. I'm talking about the crap. You got real growth names that maybe have overshot to the downside. Certainly possible. They got killed, but you got a lot of crap. out there that's been squeezing. Yeah, the last couple of weeks. Last couple of weeks. Yeah, I don't know how clean it is. That was the problem with that, Mark. It was a nice order. I don't know how clean this is. This is a software name, right? Yeah, software. I'm gonna check open interest mañana and see what it looks like. But it caught a decent sweep earlier today. I don't know if it's clean. I don't know if it's clean. Yeah, right. Watch it catch news now. Watch you catch news. Not gas, did it finally bounce? What? Oh, that's the not gas. Oh, yeah. I'm saying what? This, yeah, the complete eye. This is a watch earnings, Damien here. If you get a little weakness on earnings, that might be the opportunity there. I like this name. Good call. I like this name. Little guy, $3. I do like this name. You saw this, right? I posted the on private Twitter the Bova write-up off of earnings. What an animal. What an animal, this STNG. I can't get over it. So if you're interested, I just posted it right before I get on here. Yeah, this stock just ripped in front of our face here, but on the quarter, they raised their target to 70, which it's almost there now. What, 63 now? Bro, that's the other one, right? Wow. There's another little mini bull market, right, Mark? And these things. There's another mini bull market. All right, the complete opposite of the market. Look at this. So, watch these things. They dip. You see, look, you get things like this, or even breathers. If you see it's not selling, maybe it's just too strong of a trend, but you want to see at least a pause here after this rip. This is, oof. Yeah, and supposedly, again, I don't know much about tankers, but supposedly they got another solid year to them before things get toppy there. That's what I'm hearing. But yeah, they're printing money right now. They're printing money. Somebody mentioned the drillers. That's what's happening with oil. Energy, it's not all of energy. That already run its course. Now you're going to see, later, PJ, you're going to see pockets of energy do better than others. And right now, the drillers have been on fire, on absolute fire. It's just a whole repricing there. Yeah, that's why, this is, again, we complain we don't get too many new names. All right. I mean, this one was newish. BKR, Bakers. So that's what we got to kind of look for now. Underbelly and new pockets of the energy trade. What else? Uranium, right? We see some flow in some of these uranium stocks. CCJ. I haven't seen any more in this thing. CCJ catches a lot of action. China reopening play. Yeah. And uranium, there's more to that story too, outside of just China reopening, from what I've heard. Oh, is that what it is? Yeah, the commodities, I'm not a big commodity guy. FCX, let's see. That had a rip. Oh, yeah, that looks good. Constructed, right? Here, honestly, you got to start looking here, Mark, if you're interested. Right? You got to start paying attention to the flow here now. You see a couple of decent looking orders come in, you know, if you're eyeing the name. Even if you're a little early in the consolidation, you don't mind it if it's making another move. You know what started to move again too? They had earnings yesterday, BTU. Oh, it didn't really move much, but yesterday, day before off earnings, I think. And that's the only problem. They may get choppier as these trends extend a bit, you know? So you get chop with an upward bias type thing. Because this has been going on for a while now. What else? Anything else that we usually? Oh, I posted the Goldman sentiment just so you guys get an idea of where that's at. Yeah. So we're about neutral. Here's what it looks like on a chart. Yeah, little by little, little by little. Oh, here's what it looks like on a chart. And that's it. I think we covered a lot here. We covered a lot. Yeah. You took the words right out of my mouth, Perfect. That's how it goes. Little by little, then all at once, right? Yep. So yeah, I think we're at a point now where we kind of want to just be a little more patient and pay attention to the flow for new ideas, new names. Okay. We can scalp all we want, especially in squeezes, right? They come in and they tattoo anything, right? That's not up big on the day. You could get in the middle of it for a scalp. Okay. I'm dead serious, right? As long as this phase continues, if they come in and go boom, 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 boom to whatever name, and that name is not up $2-3 already, you probably could get in it for a decent scalp. But the goods are new names, anything that hasn't seen flow and starts to get attacked. That's the goods. Yeah, pain trade again, up. That's hard net. Me personally, I think more of this bullish phase with an upward bias. I don't know up, like where up, where we could go anywhere. I honestly, I'm lost in space. If this thing broke to the downside, it wouldn't surprise me, right? I actually would want to see that because I think we have a shot of this lasting longer if that happens. But if this thing started to grind higher, that wouldn't surprise me either, right? That's kind of what like Hartnett's talking about. That's kind of what, like, for example, the pain trade, my opinion, is exactly what we're seeing. This is the pain trade. Everyone looking to catch the new bull market, or all those Armageddon guys looking to catch the crash, right? That's all you hear. You hear nobody talking about the in-between. No one. I think we've been seeing the pain trade right in front of our eyes all this time. And look what it's doing. It's unwinding a lot of those crash players, right? It's unwinding, it's getting rid of a lot of them. And what's interesting, T, the smarter money out there, they're starting to put on crash protection, right? All of a sudden you get 50 Cent, right? You get Skew showing some life. The smarter money starts to wake up, and that's when they start to put on crash protection. Yeah, I think the most pain would be absolute boredom. I really do. I think that would be the most pain out there. I think that's where people would say, I'm done with this game. I'm done day trading. I'm done this. I'm done that. I'm going to put my money, like you guys were saying, in money markets and bonds, get my interest, and call it a day. I think that would be the most frustrating. Smart money did not have much where dumb money was loaded up. Well, what chart was that? Smart money did not have much where the money was loaded up, put to use. I don't remember. Oh, you're talking about what? Is that the sentiment trader, the smart money, dumb money, or are you talking about something else? Yeah, prior to 9/11, honestly. It's hard to compare Mark um to that. There's similarities and there are a lot of things that aren't similar, but it just reminds me of that spot where the market looks resilient, and over time you get more and more people talking about Goldilocks, soft landing, this, that, and everybody's talking about outcomes that don't evolve an exogenous event. You understand? When Russia started bombing Ukraine, everybody was talking about exogenous events. When the Fed started really getting tight, everybody was talking about the Fed breaking things, right? So we're in a place now where none of that talk is really finding any footing. You understand? Because you're getting bad news and the market already knows of that news. You understand? It's the same shit all over the place, right? Fed speak. Oh, here's Bullard again. Here's Bullard again, right? It's the same old shit. The economy's strong. The economy's a little weaker. The economy's a little stronger. The economy's a little weaker. So it's nothing new. Like the market, everything we're talking about, the market has digested and shit out months ago, right? That's what it does. But what people don't factor in is that thing that comes out of nowhere. That's where things happen. Yeah, that's when things really get frisky, right? It's not when everybody's talking about something and then that event happens. You know what I mean? It's everybody's eyes are on other things and then boom. You just, again, it's nothing. A lot of times it's stuff that you can't even, you wouldn't have even thought of, right? Like even COVID, like the last thing that were on people's minds, was COVID doing what it did. And even then, you remember like people you're seeing videos on Twitter of people just dropping dead on streets of China, and the market was still like going up. But as soon as it became real, here it was like, the market had to price that in, and that's why you got that crash. Yeah, maybe again, that everybody's eyeballs are on it. See, in 2011, I remember the debt ceiling. Nobody thought it was a big deal. Like everybody thought it was a non-event, and then all of a sudden it became a big deal, and the market went whoop. Now you already like you got Yellen pulling strings behind the scenes, getting ready for it. You know what I mean? Oh man, I saw her on TV, the hospital in Queens. What? Oh, during COVID, you mean? Yeah. Oh man, that was scary shit. Scary shit. Nobody, the Fed, right? The Fed can't fix it. Like that was the mentality out there. And in bear markets, it happens to show up. It just happens to show up. I don't know. Like bad things come in cycles, I guess. They're delaying Sharpies again till next week. You have to be kidding me. Now, seriously, okay? I understand with the conspiracy theory stuff, but it's getting out of control here. What, they got hacked? Like what are we? That's like what? That's like me, right? Like I'm technology illiterate. Somebody hacks me, they put me out of commission for ages. You're talking about major stuff here. Yeah, and listen, those of you who know me. I'm doom and gloom. It sells, but that's the extent of it. Like you can't focus on Armageddon because it never pans out. But again, just what I'm trying to explain to you guys is from my experience, when you're in these environments, everybody's trying to handicap what's in front of them. And it's always something that you're not discounting. You can't see, that throws everything out of whack. Like just when you think you got it all figured out, right? Oh, the Fed is going to pause, then this is going to happen, then that's going to happen. Yeah, okay, maybe you're right, but what happens if this happens? You know what I mean? What happens if this comes out of left field? All that goes out the window. Right. That threw me for a loop today, right? You see how I overreacted to that? It was electrical, and I thought it was Russian spies. Who knows, right? Putin. I'll leave it at this, okay? I just know at the end of this, okay, the mentality of people is going to be, it's just going to be a lot different than what we're seeing here. Just going to be a lot different. No one's going to see the light when this is over. That's what happens. Doesn't have to come up at SPX 2000. You know what I mean? Doesn't have to come at that much lower of a level, but the light at the end of the tunnel, you can't see it. That's where real bottoms show up. You don't see the positive. There's nothing in sight. You can't make the positive case. Again, most of us, you can relate because the COVID crash, you know exactly how you felt and how everybody was thinking during that time. There was not one positive thing into those COVID lows, not one. You couldn't, right? No vaccine. The Fed can't help because it's a health-related issue. Every bullish argument had a legitimate rebuttal to it. Yeah, companies, everybody's getting locked down. Companies are going to go out of business. How many bankruptcies are going to be coming out of COVID? Right? Everything. Yeah, the market we didn't even know would be open. But that's, you just don't see hope. And if there's not an event, the bad news is you have this go on for long enough that people get frustrated with the game itself and think the game is useless. You understand? If you don't get that capitulation from fear, you get it from frustration of this game is useless. Right, that light at the great line, right? That's a great line, Ashley. I remember McElliott used that line. That's a great line. That light at the end of the tunnel is a freight train. Classic. Yeah, that's what I mean, Cash. Like you see things like that. He's not going to be around when this thing turns. A lot of these guys, they got lucky. COVID, they were locked in their house. So, you know what I mean? They were forced to do that. Yeah, he's day trading again, supposedly. Day trading again. These trains are fishy to me. What's going on with the trains? I don't know what's going on there. I don't know what's going on. I don't even want to think about what's going on there. But again, listen, we can't forecast it, so there's no point in trying to rack our brains about it. We just want to be aware of it, okay? And like I said, when we see signs that there are larger forces at play, we got to sidestep it. Whatever it is. If you're long, you pull the plug. If you have to take a loss, you pull the plug. You sit on your hands and you chill. That's all. Wait for it to play out. And it makes the chilling process a lot easier because you know what's on the other end of that. Like right now, we don't. And that's the frustrating part. Huddle! God, if that wasn't a topping sign, so yeah, I don't know what is. Yeah, my boy, he's such a degenerate. This kid, he finds every theme play for anything that's going on, Cash. I forgot the symbol. Do you remember the symbol? He bought a stock today. I'm like, what is this stock? Where'd you find this thing? And I see it's got some momentum. And he's like, yeah, look what they do. It's an Israeli brain security type play. I forgot the symbol. Hold on. Oh, I got it. Hold on. Right here. I got it right here. I don't know where he finds these things. He's nuts. You know who this is? You guys will crack up. I wonder if he's listening that too now. Okay. He's the online blackjack with a bookie. No, not Lucci. The bookie had a talk with him. He lost like 30 grand on online blackjack. Okay. And the bookie pulled him aside. The bookie who's making money off him said, listen, it's rigged. Okay. This is before gambling is legal. This is ages ago. Okay. So this is out of Costa Rica. Out of Costa Rica. Okay. So the book goes like this. It goes, listen, okay, I like you. You're a good kid. I don't want to take your money. All right. I feel bad. Don't play that anymore. Okay. Bet the ball games. At least you have a shot. They're legit. The blackjack, it's fixed. You can't play it. Okay. It's rigged. No shot. But he took a week off. The next week, I see him. He's meeting the bookie. He lost 50 grand. I said, what? You just lost another 50 grand? How? He just told you not to touch that. It's rigged against you. You're going to lose money. And he couldn't resist. Okay? You want to talk about degenerate? No, you don't understand. I was up. Yeah, you were up. It's rigged, you nut. You were up. It reeled you in. And then you got hammered. That's the whole point of being rigged. Oh, my God. Comedy. It's funny now. You laugh. Okay? But he took almost $100,000 hickey online blackjack. Where is it here? Let me see the symbol. You guys see him gassing this thing up too now. Where is this? Yeah. Where is the symbol? Oh, here it is. He's telling me about all of it. 248. He's telling me how hot it's been of late. Let me see. Where's the symbol? Oh, here it is. RVSN. This is why he was all excited today. Look, see the pop today? Up 22%, 36 cents. Okay. Rail, look at this, look at the name. Rail Vision. He was like, be honest with me. Tell me, what do you think? What do you look at it, please? Just take 5 minutes, look at it. Like I'm gonna know like what am I looking at? Fundamentals of this thing? What am I looking at? But I told him to hang on to it while this rail thing is in the news and hold it short term. Don't marry it. Like he's acting like it's a good investment long term. So look what they do. Engage in the design, development, and manufacture technology that focuses on cognitive vision and safety system for the railway industry. What's the volume? Is it thin? I didn't even see. Today was 400. Oh, prior. Oh my God. Today it traded 400,000. This was a huge volume day, I think. Yeah. So do you hear what I said? Look, locomotives focused on telemetry. I don't even know what that means. RVL system to design light rail market segment. The company was selling some Israeli company. I don't know what it is, guys. But yeah, that's his golden ticket right now. So I'm rooting for him. I hope this thing goes to $4 or $5. Yeah, I know. I don't even want to tell him about it. Get pissed that I didn't tell him soon. I'm too superstitious, Steve. I get too superstitious. Yeah, I'm to a fault. I know I'm a little out of control with it. I know I have to tell you guys. What am I doing? But I kind of, I can't get gassed up making phone calls, telling people what I own. You know what I mean? If they pull it out of me in conversation, it's a different story. I can't get on a megaphone and start outing my name. That thing will go to zero so quick, I won't know what hit me. Yeah, you're like me too, aren't you? You're superstitious. I know you're superstitious. I don't know how you cannot be superstitious in this game. You know, if everybody, like, for example, like, if I went out and on Twitter or somewhere and I was like, oh, I own a shitload of this, I think it's going with all excitement, the market gods will piss all over that so quick. I've learned my lesson real early with that stuff. Real early. Yeah, well, I got my share of letters. Trust me. They come after me. They don't want to look at my losers. They want to look at my winners, though. But you got the big guys, all the big guys out there, they put their own money. You know? What about all these? You see these algo sweeps that catch halts every day? You know, look at that. That's incredible. I mean, what a money-making machine that is. Like they got machines. I guess they're sifting news out there. As soon as they pick up something, boom, they sweep immediately the offers. They get as much as they can on the right. And if it halts and the news is legit, they make an absolute score. If it doesn't, they get in at such a cheap price that they're still up a little bit on it every time. It's a no-lose situation. Yeah, Praveen, I'm the same way. I'm telling you, I'm real, like, the market gods, maybe it's all that Wall Street Jesus thing ties into. I'm a big believer in the market gods. They're a fickle bunch. You can't play games. Yeah, I don't know, Mark, how they have that set up, but it's unbelievable how it's done. Unbelievable. And you know what it is? They catch so many of them. Okay, not all of them pan out to be scores, but one score, you know what I mean, wipes out any loss, and they never have a big loss, ever. Because of the price they get in at. They always get bid up. Where we buy it is obviously later because of whatever headline. But yeah, you're right. The internet, how quick they got to be. Unreal. How do you compete with those guys? They're unbelievable. Anyway, that's the story, my friends. All right. So let's see. Keep an eye on the flow, right? You see something you like and we're still in this phase, nice spot, pull the trigger. Otherwise, just stay patient. That's all. Stay patient. Let the flow try to tell us, how things are looking, right? The more names more new names that we find, the more of a risk appetite that's out there, and that's a good sign. It's going to be a big tell. All right. Other than that, enjoy the rest of the week. Tomorrow's Friday already. We got Hartnett later today. Let's see if he has anything interesting to say. I don't think anything new because Tuesday we had the fund manager survey. So he pretty much gave us an update there, but we'll see. All right, guys, have a good night. Always a pleasure. Thanks for stopping by. See the majority of you mañana. Have a good night, everybody.